Welcome back. We take a closer look at the day's market action now with Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. Lots that markets are digesting. Let's actually start off with the Fed minutes that came out last night, seeming that the officials flagged a number of risks in the macroeconomic environment. Of course, we know that not all of them wanted a hold at the last meeting in July. Let's talk about that, what you got out of that commentary.
It's interesting that we get the results of the meeting and the minutes only come out so much later, whereas we get a lot more color on the NPC's discussions literally during the Reserve Bank governor's speech when they make the rates announcement. But in any case, the market always looks ahead to these FOMC minutes just to understand the nuances of how the decision was reached. And in this particular instance, somewhat positively, I suppose, for those hoping for a rates expectation, there was clearly a disconnect between the members, and some of them were hopeful for a cut, or at least, looking forward to cutting at the next meeting, which is what we're all looking ahead to now, whereas some were very concerned about the effects of tariffs and expected the inflationary pressures of those to only start showing up later. So I guess somewhat similarly to trying to preempt inflation, you could either increase rates or hold rates and not loosen up too much. So I think the market took heart because a lot of this was expected, but the market took heart from those voices that were hoping for a cut at the very least at the next meeting. But that's been somewhat overshadowed today by, again, in anticipation of the Jackson Hole speech. We're on the eve of that. There seems to be further attempted meddling coming from the White House in terms of trying to get their appointees into the Fed, discredit some of the Fed governors and maybe have them replaced somewhat, credibly or incredibly. I mean, we don't have to get into the details of all of that, but we do know one of them is retired, being replaced by a Trump appointee. Jerome Powell's on the way out in May. I believe another one's up for retirement, and they're trying to push a fourth out now. So that would actually give them an effective majority at the Fed, which is, I suppose, positive for rates because we know the administration wants them to cut it. But at the same time, weighing against all of that, we saw very robust manufacturing numbers coming out of the US today, which has completely swung around. These are the best numbers since 2022 for expansion in manufacturing. Some of that might be attributed to the tariffs. People ramping up production in anticipation of slowing imports, and that again is bad for rate cuts, which is bad for the Trump administration's political position.
Well, let's actually,
an interesting mix.
Let's actually talk about that, because you talk about these inflation, expected inflation, and we saw Walmart as it came out with its own earnings today, saying that it's already started to increase prices on some of its goods. What do you make of that outlook and what they've been able to produce in this environment?
Okay, so I mean, Walmart's selling off aggressively, but one has to point out that the reason for the earnings miss is because of insurance claims. And I mean, I guess one has the perception that it's almost a popular a pop culture reference, the poor treatment of the employees at Walmart. But the reality is they are fighting off lawsuits and the like. Those situations are tapering off a little bit in terms of their guidance at the very least, but those costs were in excess of expectation. The sales numbers, however, were way ahead of expectation, and they've even increased the expectation for full year growth. So I suspect it's a quality name. It is highly rated, and these things that are trading at 38 PEs do tend to sell off aggressively when they disappoint. But ultimately, the thesis for Walmart remains intact. And Walmart has been an enormous beneficiary of inflation as people trade down and look for bargains and look for these marked down items. Walmart's expansion drive has been largely based on price competition. So, yes, I mean, I guess any corporate would rationally allude to tariffs, as a hedge against their own operational performance. But absolutely, there's no way, given the model that they're running, that they
Yeah.
won't be subject a significant portion of their goods to those tariffs.
Yeah.
And ultimately, they will have to pass down some of that inflation down to the underlying consumer,
Well-
adding to those inflationary pressures and reducing the likelihood of interest rate cuts.
Well, still speaking on the consumer, let's actually go into Spur before we go into your stock pick for today. Managing to eke out double-digit growth in their metrics, even with this kind of environment. What does that tell you, that story?
Well, good management, I mean, great management teams attract great valuations. And this is a very, very conservatively well-run business that has a reputation for looking after its franchisees,
Yeah.
on top of the fact that the brands are quite strong. And, I think one of the major headaches was Panarottis, which is really, the sort of the stepchild, and the turnaround and right-sizing that business seems to be working.
Yeah.
That's turned the corner and actually expanded both revenue and operating profit in this last set of numbers.
Yeah.
But frankly, it's been performing well across the board, and they're opening stores both locally and internationally. The performance has been great, and part of the reason for the rally is the dividend. The dividend increase has been quite
Yeah.
substantial. So now, in the wake of that acquisition, which I think it escapes me now.
Yeah.
I used to love Doppio.
Doppio, yes.
Doppio acquisition, yes, which the market was somewhat concerned about, that they would bet this down and maybe they sort of, changing lanes in terms of their approach. It seems to be working well.
Okay.
And now that, we post that capital expansive phase, we can maybe return a bit more of our
Yeah.
earnings to shareholders,
All
hence
right.
the increase of the dividend.
Okay. Well, let's get to your stock pick quickly. We have about 30 seconds, Cobus.
It's topical. Blue Telecoms, which of course is somewhat vainly is changing its name to Blue Technology Unlimited. There was sort of the final announcement came through yesterday. Today we had a trading update demonstrating a trading statement forecasting enormous expansion in earnings. We don't know any of the details in that, but I suppose the market and myself are speculating that it all comes down to the CLC turnaround. One needs to consider, and yes, this is possibly the best performing stock in the JSE here to date, but the investment they made in CLC was essentially written down to zero.
Yeah.
And turning that business around, there's no sense in using the existing earnings base and
Yeah.
expecting some sort of a growth to be applied to that. This is a completely different story where that distressed assets actually becomes profitable, and the new model that they've been pursuing seems to be paying dividends. And we've yet to see further details on the actual restructuring and the potential value unlock through
Yeah.
a listing of CellC. But it's clear that there is significant value there, and looking ahead to these earnings and hopefully more details around how CellC will be coming to market.
All right. Well, thank you so much for your analysis on what has moved investors' money today, Cobus. Really appreciate it. That was Cobus Potgieter from Southern Cross Capital.